Welcome back to part 2 of the stage analysis weekend video. So this part of the video is going to be focusing on the US stock market, major indexes, the relative strength rankings of the industry groups, the industry group bell curve, market breadth in order to determine the weight of evidence. There's been a number of changes in that over the last week, which are obviously critical to what we do. I think the most important part of stage analysis, in my opinion. And also I'm going to be having a look at some of the crypto coins this weekend. There's been a number of changes in what's going on there at the moment, so some areas of interest there to have a look at. So starting off tonight with the S&P 500. The spring attempt that started on the 13th of October, I believe. 13th of October remains in place after the failed stage 4 breakdown attempt, so which has formed a little double bottom pattern down here. So breaking out this week up and through the double bottom pattern there, and actually closed the week on Friday back above the 50-day moving average here. You can see the percentage of stocks above the S&P 500 above their 20-day moving average, so the exponential moving average there has moved up to 88.2%. So back in the upper zone again. So when this is in the upper zone and holds in the upper zone, it's on a positive status on this. I do class it as moving to positive when it comes out of the lower zone and starts to break above the 30% level. But you'll note when you're areas where it holds above the 70% level there tends to be a point of where you're in a rally mode, and then once it starts to drop back down again, you can see here is when we start to break to the downside again, and that's when you tend to want to be back out again. So this is our short-term sort of favourable environment, this kind of area through here, from when you break from the 30% level all the way up into the 70% zone, and then when you hold in there, and then when it starts to break back down again through the 70% level, tends to be where you want to start to consider getting out again. You can see like we had an earlier move up through here that didn't quite work in that one. It went from the 30% move here, so started to move through here and then started to chop around at this point. So you're back through the 70%, so you are out in this kind of area here if you did it that way. So it can be quite a useful little tool, that, but as with any market breadth, we don't use anything on its own. We use the weight of evidence approach. So that's just one short-term breadth indicator that we're looking at. We're looking at multiple, and then we're using the combined of all of those to determine whether we should be obviously in a risk on or a risk off type mode. So at the moment, I'll talk about that in a little bit later in the video once I start to go through all the different market breadth charts. But at the moment, from a price action point of view, you can see the S&P 500 has moved above the 50-day moving average, the 1 plus 1 ATR level here, which you can see this dotted line here. Can't quite see it at the moment here. So you can see when we're in an uptrend, you tends to be above that 1 ATR level. So this is 1 ATR above the 21-day moving average. And when we're below that level here, you tend to be in a short-term downtrend. So you can see at the moment starting to push above it for a few days here. Hasn't yet convincingly gained above it and held above it for a while. But if we do start to chop around in this kind of area here, then as that 1 ATR level and continue to hold above, then that's our short-term uptrend kind of status there on the price action. We look at the weekly chart. We're now back to, as we said earlier back in August sort of time, we started to move to potential stage 1 type behavior here. So this change of behavior here, where we said we were potentially starting to move from stage 4B minus into potentially stage 1. Then we started to roll back over again, as often happens in stage 1. We got a test at the lower end of the range. So this is our stage 1 potential base structure. We did have a deep stage shakeout at the bottom of the range here, with potentially terminal shakeout now, spring type action, and it's come back in, starting to rally back above that declining 10-week moving average again still. So it's potential stage 1 at the moment. Doesn't mean it couldn't still fail here again. We could quite easily roll back over, make a stage 4 continuation breakdown. But at the moment, with the spring type action, the expectation is for a rally attempt up towards the upper part of the range again. So we're looking for this kind of action, with the price getting back above that 30-week moving average, holding above and testing the top of the range. And if we move into stage 2, we would be looking for a break above the top of the range, and then obviously any pullbacks to not drop back down into the range again, and then potentially give you your stage 2 entry areas and your backup entry areas there. So at the moment, potentially in stage 1 on the S&P 500 here. We look at the NYSE, similar kind of behavior. So back above that declining 10-week moving average, but still below the 30-week moving average there. Nasdaq Composite not above its 10-week moving average yet, which is still declining, still in this downtrend channel in stage 4. But again, this could potentially be stage 1. We've got that spring type action through here, rallying back up, but not showing the same kind of strength as yet. Same with the Nasdaq 100. And then the Dow has actually rallied back above its 30-week moving average, so much more likely that we're now in stage 1 type behavior in this one. Again, if it started to fall back below that 30-week moving average, it could quite easily roll back over and make stage 4 continuation. So there's no guarantee until we actually get a confirmed move back out into stage 2 again. And then go to the Russell 2000. This one's been shown the best relative strength for a while, so this is potential stage 1 as well. And again, a close above the 30-week moving average this week. So potential stage 1 starting to show outperformance versus the S&P 500 even. Go back to the daily charts here, the Nasdaq Composite showing a little bit of relative weakness compared to what we saw in the S&P 500. You'll note that the S&P 500 was above its 50-day moving average, and Nasdaq is still below. So you can see the relative strength line actually turning a little bit more negative and making a new low on Thursday there. So compared to the May low there, it's actually dropped below. So still a little bit of a relative weakness compared to what's going on in the S&P 500, but if this can break above here, then this could obviously confirm this spring and test and start to move back out again. And again, we'd be looking for a rally attempt back up towards the top of the range if it did. You can see that declining 200-day moving average coming into play in the near term here, around 11 to 12%. Russell 2000, very similar look, but much, much closer to its 200-day moving average. As we said about the relative strength on the weekly chart, that's only 1.5% away there. So very, very close now. Been above the 50-day moving average for 3 days. So small caps still showing much more relative strength. This stage 1 type base structure here. You've got the spring type action at the bottom of the range here. So didn't undercut like we saw in some of the other, in the bigger caps indexes. So it's actually showing relative strength in the near term. So you've got your local spring type action, follow through back through the 50-day moving average here. So we're now looking for obviously a push through that 200-day moving average and test at the top of the range. Potential for stage 2 breakout attempt up around this kind of area here, the 202 kind of area. VIX started to move back below its 200-day moving average on Friday for the first time in a while, so a good couple of months now. So as the market rallied, so continuing to come off in terms of volatility. So that's a near-term positive. So in a neutral kind of zone at the moment, could quite easily flip back the other way again still. So take anything for granted.